Well, good afternoon, everyone. Hope you're having a great day. Let's go ahead and make sure you all can hear me. If you please type the number one in the chat box to let me know that you can, I would greatly appreciate it. Morning, Brenda. Hey, Rick. Roman, morning. Alex, we had an amazing week away. Thank you so much for that. We did, Kevin. It was great. We had a fun time in Charleston this week. Thank you, Patty. Appreciate that. Yep, coming up, Andrew. I always do the volume first. Make sure we got one thing working first before we try to get everything going, which is the camera. And there I am. I'm up there. Hey, so I hope you all had a great day. I hope it's been a good trading week for you. The S&P did nice, although I didn't get to watch it. My wife caught me one time with CNBC on this week. It wasn't a fun conversation since I swore to her that, with the exception of alerts that come in on anything that we would have open, other than that, I would not be near the market this week at all. Glad you made it, Helen. Glad you made it. So as we jump right in, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. And for those of you that are joining us on YouTube, we went back to today is the very first time we are streaming this live on YouTube as well. So you can watch us on YouTube. Make sure if you are on YouTube, you do drop in your questions there. And my team is here to make sure that they get transferred to me because I'm not watching the feed on YouTube. They get transferred over to me, and I'll make sure to answer those as well. Yeah, live on YouTube, Rick. Exactly, exactly. And next week I'll have a big announcement. We're going to be live somewhere else as well, so I'm looking forward to that. So hopefully next week. My team's working on it right now. All right, so here's our agenda for today. It's our follow us page. Today's trades, economic reports. We'll go for a market review. We're going to look at upcoming trainings, weekly training topic, and then we'll take a look at your candidates, your stocks. Any questions you have, there are no questions that are off limits here, guys. You ask anything and anything that it is that's pertaining to trading. We're here to answer. I mean, that's my goal, is to make sure that you have a full understanding of everything. I mean, everything that I can teach you about the markets. So let's jump in. Here is our follow us page. Make sure you're following along. Andrew, we got to fix this page and make sure we get the newsletter on here in the future. But make sure you're following along with the various social platforms out there, guys. We do have a brand new newsletter. I'm going to ask Andrew to drop that in the link. You do not automatically get subscribed to it. It is only if you want to subscribe to it. Ultimately, we're going to move everything to that. Is what lists do you want to be on? We've got a general list, but then there are specific ones like Trade with Rob. Not everybody gets that. They should, but not everybody does. So Andrew will drop that link in there for the newsletter, and you can register for that. It comes out 5 days a week. We did just start inserting a weekly or a daily topic, I should say, meaning we've got a special custom thing that we do each day, 5 different ones, 5 days a week. But it's all the latest and greatest on what's going on in the market, giving you some actionable items to get started with as the day gets going. All right. Today's trades. All right, what trades did y'all do? Drop them in. I have not done much last week, obviously, because I was away. I did none. Zero last week at all. Did nothing as far as trades. Today I got one off. It was an aggressive entry. Worked out well. Should not have taken it at all. And I'll share it with you guys in just a little bit. So there's the newsletter link Andrew dropped in. The trading post is the name of the newsletter, by the way. So Brenda set up 19,900 on SPY on Friday. Great job. Great job on that one, Brenda. Tripp said 2 super fast scalps, AMD for 17% in 1 minute before it turned over, and Micron for 22% in 8 minutes. Good job there, Tripp. That's awesome, right? When you get markets, that kind of flip on you, right? So here's our candle today, right? So let's see. If we go look at a 1 minute for today on the S&P, we could see it. So we had a nice move up and a quick pull down, a big push up and a big push down. Nice double step up, a 2-step, and then a down, up, down. So we've been all over. We have not had a great run in the market, and yet here we are. Tripp's in there picking up a trade in 1 minute on this position. This is SPX, but on SPY, same move. So good job on that. You're welcome, Brenda. You got a couple of kudos there, Tripp and Brenda. Patty said, Dash, 2 contracts today, $200. Good job. I love it. I love it. Alex said, I actually had a great trading week last week until one trade went horribly wrong and wiped out wiped it all out and then some. Ooh, sorry about that. Open trade on ABBV today. That's not going great, but we'll see where it ends up. Okay. Well, hey, it's trading, not winning, right? I wish we called it that. I wish it was called that, rather. We can call it anything we want. Yeah, there you go. Brenda typed in, congrats to everyone. Way to go, Traders Jim, and kudos to everyone from Trip. Yeah, good job, everybody. Good job. For me, it was CBNA. Now, when we talk aggressive, this for me is aggressive. For some of y'all, like, what the hell are you talking about? There's nothing wrong with this trade at all. It was aggressive for me. All right, I watched on, and again, we got home yesterday, 3:30 ish or so, 4 o'clock, something like that. By the time we got all the bags in the house and everything, it's amazing how much junk you bring with you when you go away for a week. So I sat down and looked at the charts a little bit and liked that the pattern here on CVNA. We closed below the 8, which I wasn't too concerned with. We had a quick pop up 2 days later, right? We pull back, we close a little bit below the 21. We come back, we open above the 8, we close below the 21. We close just about at the 8, just below the 21, just above the 8 and the 21. So we closed on Friday in a bullish bias rank of 1 on CVNA. But I like that we kept attempting to go down and we couldn't. Now we had some lower lows here, but then we wound up with a higher low. Okay, and as far as that low right there. And I like that. I like that we finally closed at a bullish bias and a rank of 1 at the same time there. I'm looking for the move above that 351.43. So what do I want to see? In an ideal world, it's a very simple move. I want the move up. I want to pull back to the 351.43, near it, within a buck or so of it, buck and a half maybe, and a bounce, right? Well, as I'm watching it and I see the market itself open up, and on the S&P, we're down a little bit, but still in a nice bullish bias, coming off of all-time highs yet again last week. I'm watching this saying, all right, I'm not seeing the pullback. How strong is this candle going to be? If we look at the 5-minute candle on CVNA, zoom in out a little bit. We look at the 5-minute, you can see it was just massive. Good move up, nice pullback, and bounce and go in there, right? But I'm watching the 1, right, at the same time. Remember, the easiest way to do all of this, oops, I'm hitting the wrong key. The easiest way to do all of this is set your charts up the way that I use my 4-pack on TradeStation, where you've got a 1, a 5, a 30, and a daily. Now, I don't care what your time frames are. You may have a tick chart here. You may have a 15 here. You may have a 476.5-minute there, a weekly. I don't care what your numbers are, but I want 4 time frames. And for me, it's in that order. It's left to right, left to right. 1, 5, 30, daily. Smallest to largest. 5 is my primary. I'll put a P there. That's my primary chart. You decide what your primary is. If you're using a 3, an 8, a 1, a 2, I don't care what it is. It's your decision, your chart. Okay? So there you go. And this is the easiest way to do it. So I'm watching. So this way, the last candle is the same on all of them. If you use software, oh, goodness gracious. I just lost their name. Not a broker. Trip. We used to use them with the last company before we switched over to TradeStation. Who was it? Do you remember? Does anybody remember who it was? But anyway, there are softwares that you can go back and track. eSignal. There you go. eSignal. Thank you, Trip. If you're using an eSignal, they have a tracking mode. So if you put your mouse on this candle on a 5-minute chart, it'll show you the same time period for a 1-minute chart or whatever your other candles are that you have open. Right? They've got a tracker on there. I don't have it on a TradeStation, at least not on 9.5. But so I like having everything open on one side. There you go. Trip said TOS does that as well. Brenda said I do it on TOS. Yeah, more of a reason I need to switch to TOS. By having those 4 charts, I see exactly what's going on the right side of the chart. This is the first candle of the day. Okay, we get this massive move up. We get this quick little pullback in here, and I'm not pulled back enough. It's not enough of a pullback for me. But I see this bounce take place on the 4th candle of the day, and once we got above the closing price of the 3rd candle, that black candle in there, let me do this. Let's bring it in and back it up. It's easier to see it. It's too small right now. All right. So this is the 4th candle. Once we got above the closing price, that was the entry into the trade for me. Okay. So it was still on a 5 minute candle. I'm still within that first the first candle of the day is the entry, which is where a lot of my trades are lately, is in the first 5 minutes, my entries. And we had a great run up. And we're getting into the flatness time. We get a little bit lower low right here. We get a lower high, slightly lower low, lower highs, right? We're not putting in the move there. Option premiums are running out. So, we're in this trade. Let's go back to the one. Oops, not what I wanted. There we go. So we're in this trade. Call it 353 even, just to make it an easy number. Okay. We're in at 353, and right now it's sitting at 363. It's a $10 move. We're already out of the trade. Okay. It's at higher highs right now of the day. We've got a shaved top pattern right now. Right. So we've gotten to a new high, barely, or maybe it's the exact dollar amount, but we're right there. We're right at the highs of the day. Okay. But I'm already out on that pullback in there. But, there's an $8 or $9 move on the stock price. If you got a 70 delta, which turns into an 80 plus delta at that point, you got an 80 delta with a $10 move. That's $8. You got some bid ask spread to contend with in there. You call it $7 on the day. I only did one, right? Again, aggressive entry for me because we didn't have the pullback close enough to where I wanted. We had a wick come down a little bit further, but I'm looking for the actual pullback and bounce, right? Not a wick stretching down there. I'm looking for the close coming up in that area. So overall, not bad at all. Again, aggressive for me. First trade back, little rusty, right? Need to hit enter today, and that was it. So let's see. Alex said, my mistake. In case it didn't benefit anybody else, is the stock that had been in a strong bearish trend for 3 weeks. Is that a stock? Oh wait, I'm sorry. Are you talking about Carvana, Alex? No, on the other trade that went horribly wrong. Okay. A stock that had been in a strong bearish trend for 3 weeks and had a retest and a fail, so I entered. I realized afterward that the stock was sitting almost exactly at the 20% pullback level, which I remembered you and Brandon and Tony saying is a common place for people and institutions to buy again and drive it back up. It was around 300 and had dropped to about 240, which is where I entered a bearish trade. Whoops. Yeah, so it might have been too late. And it's hard to just make that judgment call for me anyway, Alex, without really analyzing the trade. It's hard for me to do that. But overall, yes, right? When you've got those pullbacks in there, it's very possible. And you've already had a $60 move to the downside. Have the wheels already come off the train at that point, right? And there's not much left to go. All right. So overall trades for today, not too shabby. Congrats to everybody. Good trading today. Let's go take a look at economic reports. And remember, those of you that are on YouTube, if you have questions, by all means, drop them in. So could somebody do me a favor, go out to the Fed and tell me what the percentage chance of a 25 and a 50 basis point drop is for next week, for September, next month. Sorry, not next week, next month. It's September. While we're doing that, while someone's pulling that up, and I know many of you have access to that, let me grab a drawing tool. So FOM's member Waller speaks. We got nothing on Monday, nothing on Tuesday, right? That are orange or red. FOMC Waller speaks at 11, and FOMC minute meetings is at 2. Well, here we go. So will Waller say anything before the announcement comes out? I don't know why Waller's even speaking right before the minutes are announced. I'm not sure. I don't know why that is. Why would you want to try to steal any of that thunder, right? Wall Street is definitely, it's listed as orange. I'm telling you that's red, because he may do oops. He may be annoyed, or they may be annoyed. Whoever the Fed chair is, or president rather, is that's speaking it, they may be annoyed at what's going on and slip something out. So you got to be very careful at that 11 o'clock. So it is a primary one for me as well. And that's on Wednesday at 11, then at 2. You're going to have lighter volume with that 2 o'clock appointment announcement coming out. Unemployment claims at 8:30, Philly Fed manufacturing at 8:30 also. It's pre-market unless you're trading futures. It doesn't matter. It's a big report. Unemployment is huge report. Certainly big for the Fed. Right, 945 flash PMI. Right, and flash services. So it's manufacturing and services. Purchasing Manager Index, PMI. What does it cost them basically to buy stuff? Right, 10 a.m. we got existing home sales. I don't expect to see anything in there. It could be a big report, but I don't expect anything in there. Jackson Hole Symposium, day one. I don't think we'll see a lot come out of that. Possibly, but not on day one. 10 a.m. on Friday. Me birthday is Friday. Fed Chair Powell speaks at 10 a.m. And then Jackson Hole Symposium, a little bit more meat on the bone on that day. But Fed Powell speaking 10 o'clock. Once again, big potential right there to hear what's going to happen. Where is the Fed Chair Powell speaks? I don't know where he is speaking. Let's see. What does it say? Due to speak about the economy and the outlook, monetary policy framework from at Jackson Hole Economic. Oh, she's at the symposium. Okay. Fed Chair. All right. Yeah, he's in Jackson Hole. Yes, Patty. Friday is my actual birthday, not the January date my Facebook page shows. All right. So let's go find the X and X out of this. There we go. So that could be a big report, guys, right there, depending on how he defends his position or not. If you start hearing things such as we may need to rethink this, or the numbers are starting to show that something may need to happen in the near future, and he starts getting a little more aggressive in his speech, a little bit less dovish in there of no, life is good, it's pretty, it's okay, just pet the cat, it's good, life is okay, don't worry about it. All right, it's not okay. Things need to change, and they need to change now. Jackson Hole day 3 is on Saturday. I'm not too worried about that. I don't care about next week's stuff yet. So you got some reports that are big this week. You got some things. Trip came back, as did Jim. 83.2% chance of 25-point cut. Nothing showing for any more than that. Okay, so we got an 83% chance that we're going to get a 25 basis point cut in September. Okay, that's great and fine and good. I am hearing more. I've heard it from more than one person now state that they believe we're looking at 1 full point by the end of the year, which means one of our cuts have to be a half, I think. So I don't know if that's going to happen. A half a point, especially if it comes on the first one, a half a point signals, oh crap, we screwed up. We waited too long and now have to cut this much. I don't know if we're quite there yet. And I know if Trump had his way, we'd cut a point right now. Today, we'd do history. We'd drop a point off interest rate right now. Granted, he'd make $2 billion on it, but just by what he'd save on his loan rates. But I don't see that half point coming out right now. And right now, it states none. There's no chance of anything else factored into the market yet of another drop. Yeah, Rick, I saw that. I told Rosaria that you had sent forward your birthday wishes for her, so thank you for that. Yeah, side bets on delay until after the midterms. Maybe. Side bet on whether Trump fires him or attempts to fire him. 50 basis point causes inflation spikes, but 25 does not as much. Yeah, I agree, Trip. It's going to be scary if it hits a half. I don't want to see that happen. If we did a quarter and a half, I think there'd be a little bit less reaction, but there's still going to be fear in there if we hit a half. If these two individuals that I saw were correct, and we do get a half point drop somewhere, yeah, we got some problems. Let's see. Jim said October 29th FOMC meeting shows a possibility of a half point. For October, half point cut of 42.7% from the CME Group site. Yeah. So there you go. So it's October. September would be scary. That would set the world on tilt. As far as what's going on in the U.S., it's oh no, we've waited too long. Now we're in trouble. Run, Forrest, run. And I don't see us being there. But that half point Does it come? I don't know, but we're going to see some reaction in the market because of it, without a doubt. So, okay, let's go back to our document. Market review. So let's go take a look at the S&P 500 and let's talk it up. All right, so you can see I've drew my chart back purposely. You can see we had a high and then we had a low, higher high, lower low, and we had a good stair step all the way up of higher highs and higher lows. Actually, there should have been one drawn in right here for a higher low. Actually, it should have been here first and then here. Right? So we got the low, higher low, higher high, higher high, higher high. And they're marked because they're all-time highs. Normally you wait for a pullback. We got the pullback, we got the bounce, right? And now we're back at, let's see, this is a high of 80.28, and yesterday is a high of 81.34. So this is the candle right there, right? So another high setting up right in there, right? And that one is not just a higher high, that one is an all-time high. Right? That's an all-time high on the S&P, right? So we're 64, 81, 34 is the all-time high. I mean, it's just amazing of what's happened. Just look at the last week. It's just been outstanding. Let me get rid of that pop bar on there for right now. And so with these higher highs and higher lows, if we go and stretch it out a bit, let's go and look at larger charts first, bigger time frames. So here we have a weekly chart, right? We're not, last week was the all-time high, right? We're not up there yet. But again, we're not in bad shape at this point. When you look at this, you had, if we count this as our bottom, so after that bottom, we bounce 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. 18 weeks, not counting this week. Of the 18 weeks since we've run up, we've had 1, 2, 3, 4, 5 weeks that have been down, 13 that have been good, right? Two fib numbers, no less. When we look at a monthly chart, right, we're hitting all-time highs for the month, right? Every month for the last 4 months, 5 months, we've had all-time highs in the month, right? April, May, June, July, and now August, we've got all-time highs setting up in there, right? So, magnifique, right? Looks beautiful. Fear at this point. Guys, the news is my fear. That has to be what you've got to be concerned with right now. There are so many balls up in the air. Any one of them could cause havoc and cause this market easily. My prediction, if the bad news hits, what's the bad news? Tariffs with China. We can't figure that out. And we have these massive tariffs slapped on each country. That's a problem for us and for China. Not just us, for China. The Russia-Ukraine war, that is a massive problem. We need to get this resolved. If there's another attack with Israel and the Middle East and all this Hamas stuff and all that stuff going on, all of these things are major issues. If Powell drops a half point out of nowhere, that's a major issue. That's a major issue. If we keep seeing, everybody's eyes are on the numbers since they caught that one guy, they believe it was fudging the numbers for political purposes, right? And not really reporting the true numbers. And then 2 days after the announcement, and the Fed does their thing, comes out and makes a change to the numbers. Whether he did it or not, I have no idea. Whether there's a department-wide that did it, an error that did, oops, sorry, I made a mistake. Yeah, you can't really do that, right? Our numbers are so far off right now on everything, and they have been for years. I do believe that numbers are fudged politically from both sides. I don't think it's one side. I think both sides do it. But I think there's a lot more scrutiny on it right now because it's being brought out into the open. And a great movie, if you've ever seen Now You See Me. I actually, when we were away, it rained on Friday by us, on Saturday in South Carolina. It rained, so we were in early and watched an early movie, and we watched Now You See Me. I think it's Now You See Me. Can you see me? Now you see me. Um, Yeah, it was a great series. I know. I watched the second one later that night. My wife was already passed out. Actually finished it on the plane yesterday. I downloaded it on my Netflix and finished it on the plane yesterday. But, at the end of the second one, when they are coming out of the airplane and they reveal everything that just happened, and this is my kind of movie. Why? Because it's a thinking movie. You really have to pay attention to every single thing that happened in there to be successful, right? For that to see how it worked. And that's what it is with trading, right? You've got to be paying attention to all of these balls in the air. Any one of them goes out of sync and they all fall, right? They all fall. It's no different when it comes to the market. It's no different when it comes to everything that we do. There's a lot of things happening. Right now, we are looking at the 8 moving average as support, which is, as of this moment, 64.24. We're looking at the 64.81 as resistance, right? Those are our two pinpoints right now, just above, just below. 64.02 is our next support. 65.04 is our next resistance. We're there. Are we going to break out? Barring news, I would not be surprised to see another breakout. But let's see. Well, let me ask this. What is your prediction? If we get another breakout, where does it go? Where does it go? You tell me. What number do you see the S&P going to if it breaks out? I'll give you guys a minute or two to type it in. Look at your charts. I'll scrunch here. You know what? I'll bring it in and I'll scrunch it down a little bit. Maybe too much scrunching. Let's go back the other way a little bit. It might be too much. Look at your charts. I don't want to scrunch it too much on here. It's going to make it too small. And I will show you what mine is. You share with me, I'll share with you. Jim said S&P is slowly getting closer to the 67.65 fib line. Possibly some news around that area might cause downward move in the market. Okay. Rick is right in that a little bit lower, 66.70, 65.04, 40. Andreas is right there with a number, right? 0.40. Brendan said 68, 64.84, 65.04. Trip said after 6,500, 66.34, and then 66.70. Tom said 66.50. Okay. Not sure how everybody got it. Andre said it's the negative 618. Norman said 7,000. And I do think 7,000 is on the horizon, Norman. Yeah, Alex said, I'm just along for the ride. That's it. You just won, Alex. And anybody else that got that, you are not driving the market. I don't care how much money you throw at anything, at any stock, I don't care how much you do. It doesn't matter. Might you artificially inflate an options price because you bought 1,000 contracts? Yeah, but that doesn't mean the stock price is moving. The options price may jack up and then fall right back down again because there's really nothing to keep it up there. So, yep, I always say, Patty said, you always say it doesn't matter what we think. Exactly. You're along for the ride. That's it. You're there for that. Rick said the major natural fibit is at 67.65. So if we scrunch down, 67.65 is right there. Right? That is a major, 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 major level. As is, and I don't know if we've got it in there. Let me see before I duplicate it. As is 7,000, which I think it's prudent to put one in now. Because it's on our horizon for sure. Right? So there it is. Okay? So here's what I'm going to do. I am going to define the most recent major move that we've had. I cannot use the entire fib because it has been too long and too many pullbacks and too many moves have taken place in there, right? But right now, I've got an ABC pattern, A to B to C. I've got defined as the 59.72 was the first extension. 63.03 was the second one. And 66.35, we'll call it, is the third one. Some of you are right in that range with your numbers. Dancing with the gorilla. Okay. So that's 66.34. But we've had another move. We've had a move, hasn't given us a reason to redraw yet, but we had to move from this low up to this high with a pullback here. Now, it's not quite as deep of a pullback as I would like, but I'm going to do something that I don't normally do, and I certainly don't normally show it, is, let me say it a different way. I do it more often than I will teach it. I don't normally teach it because it's too confusing as to the when and the why and the where, and it is very much an in-depth analysis on fibs and requires a good knowledge of it sometimes before it really makes sense. But I'm going to go ahead and I'm going to grab our ABC tool, Fibonacci extension. I'm going to come from this lowest low right here because this actually, we got this move up, sideways here, this continuation, and that big fail. Right? We're going to go up to that and call that our B. And then we're going to take this as our C level, the 62.1269. Why am I doing that? What I am looking for is confluence. Does my lines, any of my lines, the three lines that were drawn, you see one of them, the purple line right here is one of them. Right? I'm going to get rid of that line because I really don't need it. Oh, hold on a second. That might not be right. No, it's not. It's the 236. Purple line is there. Delete line. Okay, so I'm going to take that 236 out of there. Okay. Now I'm going to scrunch down just a little bit at a time. We've got a 6504 and a 6511 as resistance. So there is a confluence of two different reasons, two different numbers, two different levels as to why that is a resistance. Could that be the reason we've kind of floundering around for 3 or 4 days? Very possibly. But that 618 is really our first target, that 6511, 6504. So we already have a line in that place, right? So now as we scrunch further down, we're looking for that one right there is from the first ABC that I've got drawn, okay? So 6634 is the next upside according to the ABC. If we scrunch a little bit more, there's 6696 and then the 6765. So did this line right here drop on top of this? It did not. So it's not helping me any adding this line in here. This one, this one is very important. This one right here is not. I'm going to get rid of this line. This one worked out extremely well by giving me a, a confluence at the 6,300 level. So you got 6,300, you got 62.9980, which is the fib line, and 63.0320. So from 99.80 to 0320, so $3-ish spacing on a almost $6,000 index, we've got a confluence of 3 different levels right there. So fantastic at that point. We're going to have a struggle at that 6504. Do not be surprised to see this happen. Do not be surprised to see a move up or even, let's say, a gap up and a pullback in there. Don't be surprised if from there we move up, we play around a little bit, we pull back, we push up with a wick, and then we fail yet again with a body. Wouldn't be surprised to see that. All right. This area right now of 6504 is extremely important because there's so much happening there. You got the 6481, you got the 6511, you got the 650440. From there, 6634 is our next upside. That is our original ABC pattern. And then the 6765, which is our natural Fibonacci level. And for those, all right, Rick, good seeing you. For those that are not familiar with it, let me give you a list. Get your screen capture software ready. Oh, I don't have that here. Darn. Oh, no, I do. I do. Nope, wrong button. Try one more. Okay, there you go. So natural numbers are fib levels, right? 67, 65. We've already been to the 4181 over and over and over again. And then 10,946 is our next natural number. This 88.55 is the midpoint. Now we're nowhere near that. I don't think we hit that for a while at all. Okay, but that's how the numbers work. So there's the chart. You can do a screenshot of it, and it's all yours, right? So you'll have those numbers there. You could do it in a spreadsheet easily as well, which is what I did. I just made it look pretty. Um, okay, excellent, good. So let me take that down off of there. All right, let's keep going, guys. So I'm looking at the downside as the 864.24 and 64.02. I'm not worried about, I'm not even thinking about what happens if it breaks. If it breaks, I've got to see what the candles look like. How does it hold up around the 21? Because on this entire run to the upside, we did not have a close below the 21 except for one day. And then we came right back. So if we get below the 21, okay, it's done it before. What you got to look at each day and build out in relation to what's happened in the past. All right. So let's go back here. A little too much. All right, let's go back into our, close that one down. All right, so here's our upcoming events. We got Inner Circle check-in, which is on the 18th, which is tonight. The 20th is Wednesday, I believe. Yeah, Wednesday. Mastermind Group is on the 19th. Trading You is on the 21st. Then we're in Monster Market Movers is next week. Power Hour Trading Coaches Playbook are on a regular schedule, as is Pop, Covered Call, Explorer, and E-Mini. Now, Pop will be tonight. For those that are in Pop, it will be later. There's no question. This will be a longer video tonight because I've got to go through 6 days of trading inside of there. I may do some of the analysis up front and shorten it for that, but it's going to be a little bit longer one, so it's going to take me a little more time to get through, no matter how I do it. I don't want to necessarily send you through a 45-minute video, so I may do some analysis and make some decisions on it beforehand, but you'll get a good video of everything that's happened. Anything that's happened, you'll see it. Yeah, I'm probably not going to pull anything out of it. We'll just keep everything the way it is. But it's going to be a little bit of a later video than normal. I always try to get it out by 6 where possible. But that's where we're at. But they're all on their regular schedule. I'm back from vacay. Brandon's back from vacay, so we're good to go. Covered Call Explorer, guys. Andrew, can you drop a link in there, please? It's Covered Call Explorer. If you're not a member of that, your very first month is $7 to register for your first month of Covered Call Explorer. Guys, Trip puts out an amazing video, which comes out every Thursday, puts out an amazing video which has various cash flow trades on it, covered calls, naked puts, iron condors, bullish and bearish diagonal, or call diagonals, put diagonals, and he does all the work for you. Basically, your entire action plan is laid out. All you need to do is determine if it fits your risk profile and hit enter. Once you figure if it fits your risk profile, though. All right, so Andrew dropped the link in there. Go ahead and check that out. So here's our weekly training topic. Back to school, back to trading. And it's funny, in New York, we're not back to school yet. My wife is a teacher. My daughter's a teacher. They're not back to school yet. My daughter's working today, getting her classroom ready, but she's Dutsibazzo. She's been working on her class for over a week. Just throw plastic over everything and come back next year and take it off. That's it. I don't know. I don't see it. But anyway, but down south, we were in South Carolina, in Charleston, we saw private school anyway, was back, right? Some of the private schools were back. I don't know if the public were back or not. But what happens when you go back to school? Some of you remember because it wasn't that long ago. Some of you are like, yeah, it's been a long time since I had to go back to school for the very first day of the year. Well, when you go back to school, it's getting used to a routine, right? It's getting used to the new teacher, your new friends, maybe the person or the people that sit around you, your lunchtime, the subjects, the new material, the new challenges with being in school, right? And by subject wise, I mean, and all of that. Well, trading is no different. But here's the thing. When you go back to school, everything is taught in a sequence, right? This is what you need to learn first, then second, then third, and so on and so on and so forth. When it comes to trading the market, it's no different. You've got to get back to basics. You have to get back. And for some of you, I'll never say slacked off because that's not the right word. You took it more easy over the summer, and that's okay. Me too. Me too. But there's got to get to a point where I flip a switch and I'm back to it again. Right? This last week, we were on vacation, and the first thing I did, day one, we got in our room. My wife and I went to scope out the hotel. and we walked around, looked at everything there. We wanted to find where the gym was, the pool was, all of that stuff. Found the gym. It was a great gym, Peloton bike. It's got ellipticals and treadmills and free weights up to 100 pounds. It had kettlebells and mats on the floor and the jumping boxes and all of that stuff. A bench press, a bench that you could press with dumbbells. It's like, yes, this is great. I'll be down here 4 days this week to work out. I worked out this week a total of 0 days, right? So I'm back today, 6:30 this morning, up out of the house, gone, right to the gym, right back at it again. And you got to get back to that. Now, I've been off for a week. Am I a little sore? Yeah, the bed I slept in was horrible, right? My back is a little bit stiff, right? Could I push the same weight that I normally would push? No, I did a little bit less today. It's kind of getting back into it. So maybe when you relate that back to trading, if you've taken some time off, you've slacked off a little bit, if you want to call it that, but if you've taken some time and you've taken it easy a little bit over the summer, maybe instead of getting back into $1,000 investment in a trade or 3 contracts, maybe you do $500 or 1 contract, right? Where you're doing a little bit less, but you're just getting acclimated. First trade back today would have been an aggressive entry no matter what for me because it's been over a week since I've done anything, right? So definitely want to make sure that you're prepped, ready to go, right? But to me, getting back to it, I hate the phrase or the thought of setting what is called a New Year's resolution. I need to wait until January 1st before I can do it. Man, I can't change anything. It's only October 8th. Got to wait, or it's August 18th, or whatever the date is. I can't do it yet. No. You certainly can. Right? Forget resolution. You need to make a commitment of what you have to do. Right? So what are some of the things that you're going to want to do? Right? Let me grab a notepad here. Right? So back to school, back to trading. Okay? So what are some of the things that you're going to want to do here? Right? First off, you're going to need a strategy. What strategy are you going to focus on? Are you, and you can break this down into multi-tiered, by the way. You could be a buyer versus a seller. And you could look at that first. What am I, a buyer or a seller? I'm a buyer. Okay, buying calls, buying puts, right? That could be your buying strategy. I'm a seller. Covered calls, naked puts, diagonals, whatever it is, I'm a seller. But you need to come up with a strategy, right? And then from the strategy, you need a trading system. The strategy, and I'm just going to put this down, would be, as an example, long calls and puts, covered calls, iron conduits, etc. That's the strategy, right? What is the system, right? It's a fully functional and detailed layout of how to trade your strategy. So all the rules associated with it. I'm not going to go through the various things in there, but what's the stock price that you need, or that you're willing to invest in? Once you've got stocks in that price range, how much are you willing to pay for an option? How big of a bid-ask spread are you looking for? What's your minimum open interest? What's your delta that you're looking for, or delta range? All the details behind your trade. All right, and that goes into, inside of the trading system, that goes into setting something up such as your identify, enter, manage, exit. Okay, having those components inside of your trading system, right? That'll be critical, right? You've got to have your risk profile down. What are you willing to risk? What does risk look like for you? if you're the person that enters a trade and you hold overnight, okay, and you find yourself laying down in bed in the middle of the night and you're like this, you can't sleep, your eyes are wide open, you're freaking out, sweat pouring off of your head, thinking about that trade, that is not your risk profile. You're in the wrong position for that, right? Absolutely unequivocally the wrong position. Right? But what is your risk profile? And that would be the risk you're willing to take and the types of trades, all of that. But how much you're willing to risk? Do you consider yourself an aggressive trader? Do you have a very large drawdown that you allow? Meaning, how much can the position go against you before the uncle factor hits? When you get pinned down, your arms behind your back. Uncle, uncle, uncle. Okay, I give. Right? That uncle factor. What risk are you willing to accept? Are you willing to take on? That's important. You've got to identify that. These are just some of the things that you're going to need inside of your overall setup of what to do, right? One of the things you definitely don't want to miss is practice. Non-funded trades. Start back slow, right? Summer's over, just about, right? They say sell in May and go away. Well, we come back in the beginning of September. Right? October is normally a good month, right? Because of window dressing and some of the various things that happen there in mutual funds. Right? But you've got to practice trade. Get used to swinging the bat. Get used to hitting the enter button. Go back in and set up a couple of non-funded trades so you make sure you're hitting the right buttons. Right? That really is where the rubber's going to meet the road, is with that. Right? Over and over and over again is getting comfortable with that. Okay? And make sure you set time aside to learn. Sorry, think about that. Caps. As a coach, a family that has two teachers in it, right? It's important. Education is important. And you don't learn the market and stop. It doesn't work like that. Learning is a never-ending game when it comes to the market. There's always something different that's happening out there. Always something different that's going on, right? Let's see. I haven't checked it in the last week. I did hear a little buzz, though, the other day. Let's see where Bitcoin is right now. Some of you are like, yeah, it's crazy. I don't know. You got Bitcoin. Oh, it's down from where it was up today, but it's $116,000 a coin for one coin. It was $1,200 for a coin when I bought it the very first time. I don't have that anymore. I sold that, bought more back when it ran up, sold it, came back, bought more, and I've held it. I haven't sold it since. That and Ethereum are the only two that I own. There's XRK or Q or something, I don't know, that others are crazy about. Whatever it is, guys, but you've got to educate yourself. There are things that are good and things that are bad, higher risk about crypto and about gold, about futures, about bonds, whatever it is, about options. You've got to learn the systematic approach to that. The only way you're going to do that is with education. Now, you can learn it from us. You can learn it on YouTube. You can do whatever you want. That's fine. Right? But you definitely need to focus on your education piece. You cannot say, I know everything there is to know about the market. The things that I know today that I have learned in the last 10 years, many of them didn't exist when I started in 1997. They weren't even there. Right? So here are 5 bullet points as a starting point for you for your back to trading. Right? Back to school, back to trading. And it's all related to, it's getting back in the groove. That's all it is. That's all it is. I want you to identify, here's your first task. Go ahead and identify for everybody 15 to 20 stocks on your list. If you have not reevaluated your list in the last 3 months, go and reanalyze it all over again. See if there is not something that is better for you. Okay, I'll give you an example. This is our change log for this year. July 9th, we took out United Healthcare. We took out United Healthcare, NVIDIA, Chipotle Mexican Grill, XYZ. We added APP, Carvana, Oracle, Dash. Okay. Um, Oracle was not my choice. One of the students, a couple of students had, because we voted on it. Oracle came up as one of them to add in. I wanted a different stock, um, just because I know Oracle and how it moves, right? So if we look at, I said July 9th, right? July 15th, we've got one up here. These four are the APP trades we've done since July 9th. Actually, there's a July 14th. So 5,000, and let's call it, let's do this one. Let's do 7,600 and 400. So that's 8,000 plus 5 is 13 plus 11 is 14, $24,000 on APP this year, right? That's the first one. Next was CVNA. So we were plus 24K. On CVNA, we're down, we'll call it 5,500 on CVNA. The next one was Oracle. We're up 2,200 and 3,900, so that would be 30. We'll call that $4,000 and $2,000. That's $6,000. That kind of wipes out the CVNA. And then Dash is the last one. So we've had 4 trades on Dash. 2 winners, 2 have gone against us. These two 390s wash each other out. So we'll just call this about $1,000 in total. So we're up about 25 grand on those stocks since July 9th. Since July 9th. And then Carvana was a trade today. And I don't have anything analyzed from last week yet. So they may be more already in there that I'm not even talking about yet. But this is what, going back through our list and saying we need to get rid of these that don't perform. Right? And once we got rid of the ones that don't perform, UNH, yeah, it started to move a little bit, right? Started to move a little bit. Still wouldn't have a trade I would have taken yet. Today was a big gap. Actually, that was on Friday. We didn't update yet. Right? There's a big gap and another gap today, but we've lived for months here. We lost all this opportunity to other stocks. I love NVIDIA. Hated taking it off. But it wasn't making enough of a move to make us good profits. It wasn't there. XYZ. $70 stock. It's just, we're getting these small profits. The amount of movement from it day in and day out was minimal. And then CMG, Chipotle. Right? Back down again. Right? So it ran up to 58. And we got rid of it on the 9th, which is here. It went from $55 back to $44. It's just not there. You're welcome, Ed. It's not there. So go through and analyze your list and make sure that these candidates that you have on your list, those candidates on your list, are exactly what you want. And do not be afraid to reach out and look at other ones. Practice those for a month. Add them to your existing 20. You have 20 now. You want to add 3 new ones and ultimately get rid of 3. Great. Add them to your list. Start with 23 and then get rid of the 3 that just are performing the worst. And that's what we did. That's what we did. If we look at, I still have this open. I don't. Let me open this pop document again. I think it should be in here. Let's see. Let me find, by P&L. Oh. Okay. This is pop, January to June of 2025. Look at the bottom. XYZ, Chipotle, NVIDIA. XYZ made us $9 in 6 months. Chipotle made us $19.50. NVIDIA made us $8,000. United Healthcare made us 56,000. Rob, you're crazy, but it stopped moving. It stopped moving. So take it off for now. Look at it when it starts to make movement again. Add it back. Add it back. Home Depot was making 12 grand, so it's 2 grand a month. It's not horrible. It's a nice rental property. I'll keep it in place. Who cares? It was a comfort zone. But we also didn't want to go ahead and wipe out half of our list. And so let's just start over with 10 new ones. No. 4 is the biggest we've ever done. I've never removed that many stocks all at once. But when we ran the numbers, they were there. We get through September, I'll run my numbers again. And I'll see what doesn't perform. And we'll pull those off and we'll add new candidates again. Yeah, so Trip said NVIDIA and XYZ are great for scalps, but not for swings. Exactly. Exactly. Not that you can't trade them. You certainly can. I'm not saying you shouldn't trade those guys. They are just, there were other companies out there that were better for what we do in pop. All right. All right, guys, we only have a couple minutes left. Go ahead and drop in the candidates. What ones would you like me to take a look at? This is your chance for me to analyze your stocks before we get done here today. If you're on YouTube, make sure you drop those candidates in the chat, and my team will transfer them over to me. Hey, Roman, Tesla. All right. So it's in the, let's see. No, we got today. So it's in the middle of nowhere, Roman. We got the bounce off the 8. I'd love to see it above the 339, but I would definitely watch out for this recent swing high we had in there, the 348, 3/4. That would be my first go-to for it. So keep your eye on that one, but it's in the middle. There's nothing that's exciting me on it just yet. I hope that helps, Roman. SPY. So there, 818. Okay. So Brenda, SPY is in the middle. I need to pull back to the 639, at least a stretch with a wick down there at a minimum. But I definitely would love to see it back. Let me bring this up and get all symbols just so I can see the pivots on them. Okay. Tom's asking for Amazon. Now, Amazon, from that same, well, this one was a bit earlier, July 7th. We made the change on July 9th. The first losing trade we had was the July 7th. Everything has come after that July 9th date. Now, Amazon's been on our list, right? 1,000, we'll call that 2,000 more. That's 3, and 4 is 7, and 3 is 10 grand on Amazon in the last month and a half, month, a little bit longer. So we're in a bullish bias right now on it. It was Tom, right? Yeah, Tom, we're in a bullish bias on it right now, rank of 2. I'd love to break above the 230 bounce and take off again. 236 is resistance. Clearly, we've hit it twice, right? So that's a clear resistance. Somewhere down below there would be my target. I'd love to see us pull back a little bit as the 8 is climbing up, get a confluence. The breakout, retest, and bounce would be better, but we may not get that. Let's look at AMD. So we're in a neutral, it's actually not a neutral bias, my bad. We're in a bullish neutral bias right now, rank of 3. I need to break above the 176 half level, Brenda, before, and the bounce before taking the entry. QQQ. Same thing. There's nothing here. 581 is resistance. Let's see. 581. We need to start adding a couple of things in here. 600 level is first. $581 and 6. If we said it was 20, it'd be 40 points. Oh yeah, we need serious splitting going on here. So I need to add a negative 809 to start. 81 to 99 is that 18 points? And we're at 12, so we need to split that level in half again. So break the 581, 590 is resistance on the upside. Alex said, not a specific chart question, but I know an ascending triangle usually breaks to the upside and a descending triangle usually breaks to the downside. But what do we watch for with a sideways triangle in either direction? When you're saying a sideways triangle, Alex, you're just talking about a wedge pattern forming, just something where we've got the highs coming down and the lows coming up. Yeah, where it doesn't look like it's leaning in either direction. So the breakout, all right. So the general rule is wherever the run started from to where it finished its move is where we're looking at identifying what the potential move is. So let's say that this was $10, just to make an easy math, right? The expected breakout is either direction is $10 of either direction, right? But you've got to look at, Alex, if you go back into the Fib videos and look at the Fibonacci time ratios, when we draw that Fib time ratio and we're looking for the breakout to happen between those 2 points, right? If the breakout happens later than that, it's gone too far into the cone and it usually just peters out. Whichever direction it breaks, the ideal is break out to the downside, let's say, retest and fail. That's ideal. Or break to the upside, retest and bounce. And it happens in between these two levels, then we're all over it. It happens outside of it, you've got a higher risk of being right in the trade. TLT, Trip's asking for, which is treasury bonds. So I don't trade them, Trip. I don't trade TLT. It is related to what happens in treasury, which I am not a fan of following. But right now, treasuries are going to be very much in focus if we've got a potential rate cut coming. So I'll add that to it. But treasuries are not really my jam. For me, I tend to not deal with them. That's why I asked. Yeah, everybody's like, me too. Yeah, excellent. All right, so hey, everybody, appreciate y'all being here. Those of you that followed along with us on YouTube today, thank you very much for that. The questions that came in, I appreciate those. We're going to leave the room open a couple of minutes that you can grab the links in there that Andrew dropped. Have a great day. Thank you so much for all of the birthday wishes, everybody. Very much appreciated. And I will see all of you at our next update. Take care, folks. I'll see you soon. Bye.